And we're live.
Trustee Thebes, trustee Johnson. Here. Trustee Pandolfi,
Here.
trustee Wyckoff. We have a quorum. Can we hold it just for a second? Brian says that your mic is not, whose mic is not on? Okay, Ron, let's see. Hold it down until it turns green.
Thank you. Okay, I move approval of the agenda. Is there a second?
Second.
Any discussion? Teresa, please call the roll.
Trustee Thebes, trustee Johnson,
Yes.
trustee Pandolfi,
Aye.
motion carries.
Second.
Trustee Thebes, trustee Johnson.
Aye.
Trustee Pandolfi,
Aye.
motion carries.
I'm here now. It's Michelle.
Thank you, Michelle.
Very good. If you want to flip to the next slide. There we go. We will start with the balance sheet. The balance sheet is a consolidated balance sheet comparing our major governmental funds as of September 30th, 2025 in the right column with June 30 or our fiscal year end, which we'll talk about a little bit more during the audit presentation in the left column. Really nothing of note to mention on the balance sheet other than you'll note that our cash at the end of September was just over $33.27 million, which is actually about 9 million higher than the same time period last year. So we've grown our cash a little over 37% in the last year. As a result of that, we don't believe we'll need to draw on the line of credit for the first time in the last several years, which is good news all around. So if there are no other questions, I'll flip to the next page. This is a summary of the taxes collected. The top is a combination of all three. For the period ending September 30, we've collected $743,642.63 from our three county partners. Below that is the taxes collected by county. We're about 22% lower than the same time period last year. And the main reason for that is actually, as we're going to talk about a little later, we went through a software project. Jackson County just recently went through a software project for their collection department. And so their collections were delayed a little bit. So we should see those collections that we typically would have received in September. We should see those reported in October. If there's no questions, we'll go to the next page.
Mr. President. I reviewed this. So what page is that on in this financial report?
Well, that's the annual comprehensive financial report. That was a part of the board docs presentation for the finance committee.
Okay, so it's
just the quarterly or the monthly financial report.
Okay.
That's also part of the audit.
Oh.
We don't typically print out the board or the material. You may want to speak up, so I don't think you can hear you.
But, yeah, actually, this is what I was reviewing this afternoon. I know I've got is that part of it?
No, that's part of the presentation.
Well, it's, you know, whatever, that's that. Let's see. All right, I think this one is which, what topic?
Well,
Tax collected.
Yeah, the one we're currently looking at are the taxes collected from
Okay.
July through September.
Yeah, I was looking through all these. That's fine. Okay.
Okay, if there's no questions, we'll flip to the next page, which is looking at the general fund. So the general fund, the column on your left is the actual revenues and expenditures from July through September. And the column on your right is the projected budget for the same time period. Our revenues, as I just mentioned, property tax being our largest revenue, are down slightly, so we're under budget. We've collected $1.175 million in revenue, which is about 56% of our goal. The majority of that is in the property taxes that we'll get later on this year. On the expenditure side, payroll was just over $7.7 million, which is about 83% of the budget. Some of that is due to the vacancies that we currently have, as well as the benefits tied to those wages not being paid out. The library materials budget, we've spent just over $3.14 million. It's about 72% of our budget so far. The main issue that we're seeing here has to deal with one of our vendors, Baker and Taylor, that is currently or will soon be going through financial restructuring. As a result, those orders are not being filled. So we're currently looking for new vendors to fill those orders, and those dollars should be expended later on in this fiscal year. Those are really the only two comments I had, but I'd be happy to answer any questions that you all have about the general fund. I guess for the record, I would just point out that, and we'll talk about this a little bit more during the audit presentation, but we're in the part of our budget where our revenues are considerably under our expenditures as we anticipate the next tax season to start in December. So when we had written this budget, we thought that we would spend about $15 million in cash, and we really have only spent about $12 million. So we're doing a little better than we had originally projected. The next slide is the capital project fund. And we don't really have a lot of activity going on in this fund. Of course, you all are aware of the conversations we're having surrounding the headquarters project. And I believe there's one item on the capital replacement plan that'll be on the agenda for the meeting later on this evening. But other than that, there hasn't been a lot of activities. So unless there's any questions, we'll move on to the next slide. Okay. This is a listing of our grant and gift fund. Grant revenues collected so far are just over $19,000. Expenditures are just under $39,000. We have a listing of each grant or project in the fund. If anyone has any questions, I'd be happy to expound on those, but this is more just for tracking of those grants and project dollars. Not hearing any, we'll move on to the next one. This is debt service. We made our first interest payment on the 2018 certificate of participation in August. This is a tax-funded debt, so those taxes haven't been collected yet. So essentially, the debt service fund writes an IOU to the general fund that you saw on the balance sheet. And once those property taxes come in December, then this fund will pay back the general fund for the $1.1 million that it borrowed to make the debt payment, and then we'll make the principal payment that's due in February. And then the last slide is the health insurance fund. So the health insurance fund has brought in just over $907,000. We have expenditures of just under $449,000. So year to date, we have an operating income of $458,000. which puts us in a pretty good position to handle the health insurance benefits for our employees. Those are all of the comments I have on the quarterly or on the financial report. I'd be happy to answer any questions that you all have. Thank you. Thank you. Next matter is very good. With us today is Colin from Hood and Associates, and we also have Michael Keenan online. But before I turn it over to them to talk specifically about the audit, I wanted to provide just a little bit of information on the document you received today, the annual comprehensive financial report. If you can flip to the next slide. Go ahead and flip to the next one, please. I've got too many pages. So we're presenting the annual comprehensive financial report along with the annual audit today. And after the auditors finish their presentation, we'll come back and provide just a little bit of context, some highlights from this report. I'm going to flip to the next slide. So some people are uncomfortable engaging with this report. It's, you know, a heavily financial laden document. And I know that some people treat this report kind of like a Rubik's Cube. They're either really comfortable with it and they enjoy engaging with it, or they're very hesitant to engage with it. So we're hoping that by the end of this presentation, this document will be more comfortable to you. And you all will have a better understanding of how the annual financial report is crafted. So a common question that's asked is, you know, what is the purpose of an annual comprehensive financial report? I would say that the primary objective of this document is to display financial transparency and fiscal accountability, not only to the taxpayer, but to the residents and the patrons of our district. And so when you view the different sections of the document in its entirety, you really can appreciate the financial condition of our organization. So the first section of the report is actually the introductory section. In here, you'll find the transmittal letter that Aaron and I crafted together, a listing of principal officers in the organization, both board members and staff that were a part of the organization as of June 30th, 2025. You'll find a map listing all of our branches, an organizational chart for our organization, and then a copy of the Certificate of Achievement on Excellence in Financial Reporting, which was awarded to the library by the Government Finance Officers Association. So the GFOA put this program together back in I think it was 1950. It's been a long time, really stemming from public, you know, discourse about making sure that financial information is presented in a uniform way. And so they established this criteria, and organizations such as a library go through that criteria, put together the document to meet those requirements, and then submit an application. The document's then peer reviewed by 3 or more organizations from that are also members of the organization. And if they all agree that the document meets or exceeds all of the standards, then the organization is awarded that letter. And so we're proud to say that the library has received that award since 2011. The document that we submitted last year also got that reward. And this document that you have before you has been submitted, and we believe we meet all the requirements to receive that award again. So it's a significant achievement. It's a significant amount of you know, work that the finance department goes through just to make sure, as I said before, that this document shows financial transparency and has accountability toward the taxpayers and the patrons of our organizations. The next section of the document is the financial section, which is what we're here to talk about tonight. It would be considered the, you know, the meat of this large book. It starts with what's called a management discussion and analysis. And if I were to make a recommendation to you all, I would say, if you spend some time reading just that, the management discussion and analysis, followed by the auditor's audit, which is just after that, you'll really get an appreciation for the entirety of the document without having to go page by page or line by line. In that management discussion analysis, we really dive into what were the factors that caused, the activities that occurred throughout the year? How did it do compared to the goals that we set in the budget? And then what are we planning to do next year? So it's a really nice recap or summary of the decisions, the assumptions, and the projections that not only went into this document, but also go into the budget process. And then the last section is the statistical section. For those of you fellow nerds like me out there, this is a great area where we look at the last 10 years of data and compare it all on one sheet. So if you want to look at population trends, or you want to look at how many employees the libraries have over the last 10 years. These are great schedules that are put together, again, not only for the public's benefit, but also for your benefit. So if you want to flip to the next slide. The last thing I want to cover just briefly are those financial statements. So there's really two sets of financial statements. There's the government-wide financial statements, which are reported on a full accrual level and are, sorry. The statement of net position and the statement of activities. And then on the government fund level, so those that we're more familiar with or that we do on a day-to-day basis, you have the balance sheet, which you saw a summary of tonight. You have the statement of revenues, expenditures, and changes in fund balance, which we show at the aggregate level on page 16. And then if you want to look specifically at the general fund, that detail is on page 44 of the document. With that, I will turn it over to Colin. You want to flip to the next slide. Colin is a senior audit manager with Hood and Associates. He was instrumental in helping us get through the audit this year. So Colin, thank you, and I'll turn it over to you. Oh, I'm sorry. That microphone, if you, at the very bottom, if you slide it toward the glass.
There you go. That one.
Yeah, it's for our online, so you won't actually hear it in here, but they'll hear it online.
Thank you, Jeremy. You're right, this is daunting. This wasn't that. We want to get it.
Right.
Like you said, I am here with Hood and Associates to present on the audit for the fiscal year ending June 30th, 2025. Michael, who is in Paul, also part of that. A little bit.
Can we move that microphone towards them more, please?
Sorry about that. Is that good?
It still sounds like you're far away, but I can hear.
Go ahead, do it now. That's my bad. So give me bottom line.
All right, one more test. Is that good? All right, a little bit about Hood and Associates CPAs. We serve Missouri, Kansas, Oklahoma, and Texas since 1992. Every few years, we go through a peer review where we have other CPA and accounting firms review our quality controls. And as a result of that, we have been awarded the highest rating given as a result of that peer review. We are members of the American Institute of Certified Public Accountants, the AICPA, the AICPA Government Audit Control Center, and we are also licensed in Missouri, Kansas, Oklahoma, and Texas. The scope of the audit was we were engaged to perform an audit of the financial statements of the Consolidated Library District Number 3, known as Mid-Continent Public Library, for the year ended June 30th, 2025. Next, we have management's responsibilities. Management is responsible for the preparation and fair presentation of these financial statements in accordance with accounting principles generally accepted in the United States of America, otherwise known as GAAP. This includes the design, implementation, and maintenance of internal controls relevant to the preparation and fair presentation of financial statements that are free from material misstatement, whether due to fraud or error. Management is also responsible for following laws and regulations, ensuring that financial information is reliable and properly reported, implementing systems designed to achieve compliance with applicable laws, regulations, contracts, and grant agreements. This is all in the for being transparent, like Jeremy said. Auditor's responsibilities. Our responsibilities are to conduct our audit in accordance with auditing standards generally accepted in the United States of America and the standards applicable to financial audits contained in government auditing standards issued by the Comptroller General of the United States of America, as well as the uniform guidance. We are responsible for planning and performing our audit to obtain reasonable assurance about whether the financial statements are free from material misstatement. Reasonable assurance is a high level of assurance, but is not absolute assurance, and therefore is not a guarantee that an audit conducted in accordance with generally accepted auditing standards and government auditing standards will always detect a material misstatement when it exists. When we do our audit, we take a risk-based approach. We do not test all transactions because that would be a waste of everyone's time and money. So due to that, we cannot provide absolute assurance because we don't test everything. We are responsible for reporting on internal controls over financial reporting and compliance with laws and regulations. The Auditing Standards Board of the American Institute of Certified Public Accountants, the AICPA, recommends that we communicate the following matters to the governing board. Illegal acts. None came to our attention as a result of performing our audit procedures. If there were any, we would have to tell you here. Changes in significant accounting policies. There were no significant changes to accounting policies in the current period. Future pronouncements are discussed in the management letter. No difficulties or disagreements with management, which is always good. And then cooperation. We had full access to books and records. That is for anything we selected for testing. Financial compliance audit addresses three basic questions. Are the basic financial statements free of material misstatement? We have issued an unmodified opinion that the library's financial statements are fairly presented in all material respects. This is referred to as a clean opinion, which is the highest level we can provide. Are internal controls over financial reporting adequately designed and operating effectively? We did not identify any deficiencies related to internal controls over financial reporting that we consider to be material weaknesses. Did the library comply in all material respects with the finance-related laws and regulations? The results of our testing disclose no instances of noncompliance or other matters that are required to be reported. Management letter comments. As you'll see in the required communications, these contain suggestions for best practices and possible improvements in internal controls noted in the conduct of the audit. We are always striving to improve everything. Some of the ones we listed this year are lease and subscription-based information technology arrangements reporting. This is still a relatively new accounting standard, so there's still been some issues with getting everything perfect. But so we recommended that the library focus on creating controls to identify all leases and subitas. Cybersecurity, that's always something to be aware of, especially with how technology has taken off. So we're always looking to improve that. Next, we have future accounting pronouncements. We don't anticipate the new pronouncements to have any significant effect on the library, so should be all good there, but there's still something to take a look at. I'd like to thank everyone, especially Jeremy and the accounting crew. They were a great help. And if you have any questions, please let me know.
I just had one, maybe it's relatively minor.
Yes, sir.
How many branches for this library? It says 33 in here. I thought it had 36.
We have 34 branches total if you count Farview. Farview's a little bit smaller than the others.
Yeah.
Yeah.
It says Mid-Continent Public Library System consists of the following 33 full-service branch libraries totaling over 575. So that's as far as.
Farview is not included.
Right. So do we have 35 or I thought we had 36, so that's wrong to begin with, right?
They're listed right here.
If you're
I'm just-
counting all outlets, there are 36 outlets if you count the 2 library to go. So outlets and full service branches are different.
Yeah, I would assume that. I thought we had 36 full service. This is not a major issue for the world. Just wanted to know, what was missing here. And, okay, that's fine. That's fine. That's all I have.
Thank you, Colin.
Yep.
Appreciate it.
I can do this, but for my own, if you could turn that back on. Could you just elaborate a little bit more on that guide today?
Yes, these are subscription-based information technology agreements. These are going to be softwares, something you lease that's not really, I guess, tangible. They have a specific accounting for them. And it used to be you didn't have to treat them like a lease. I believe Michael might be able to expand more on that, but especially with like a library, Microsoft would be, but that one's year to year. So you can exclude that. But any, say you're a new accounting system, if you lease that for however many, 5 years, that's gonna go on there as kind of a Sabita.
So would that include things like Cersei Dynix? Yep.
Yep.
All right.
Sources.
So those are some of the things we looked at with Jeremy to kind of figure out what all is gonna go under that umbrella.
I get it. Thank you.
Anyone else?
Any other questions? I do have one. Is this this lease business, is that kind of like the old FASB 13 where we had conceptually operating leases versus purchasing leases? Is the new rule kind of like in that vein?
Yes, I believe so.
Good.
Yep. It's just kind of expanded on it more.
Gotcha. Thank you.
Mhm.
Any other questions of our auditor?
And maybe just one more. It's on page 7 of, I think, of the report, the management's discussion and analysis.
Yes, sir.
I just want to know, in 2024, there was not an entry for capital grants and contributions, but there is in 2025. Is there some reason that, is this a new?
Yes, that was the money we received for the Woodneath tax increment finance project.
That was
So
the one
just
that
a
was kind
one-time
of
thing.
being held up, I believe.
Thank you.
Yep, no problem. Thank you guys so much.
Okay, thank you.
For just a few more slides. We can go to the next one. On page 14 of the report, there's the balance sheet. You'll see the cash and investments at 49.46 million. And our current liabilities that are due within 1 year at 16.18 million. This illustrates that the library has sufficient funds to cover our current obligations, which is good news. However, because our tax year and our fiscal year don't align, it's a little bit misleading. So this next slide is a slide you'll remember from the budget. It's just a reminder that even though we have a large cash balance at June 30, we really need that cash to fund operations from the July 1 until about the middle of December, when the next tax year picks up. And then after February, we need that cash balance again to fund operations from February through the end of the fiscal year. So there will be discussions later this year, early next year, about whether we move that fiscal year. And this would be the real reason why, is that it gives in my opinion, a false impression of a large cash surplus, which we don't really have. We just simply collect it at a different time than we spend it. If you move on to the next slide. Focusing specifically on the general fund now. Back on page 14, the balance sheet, looking at the general fund cash was 27.5 million. And our expenses for the entire year were 66.9 million. So the general fund has roughly just under 5 months of cash on hand, if you will, for expenditures. And then looking at the right side of that slide, our revenues exceeded our expenditures for the year by just over 2.26%. And then the two more slides here. This next slide is looking at the general fund in a little different way. The green columns are the unassigned fund balance, meaning the portion of that ending balance that has no designation tied to it. The yellow line would be the cash balance, again, at June 30 of the various fiscal years. And then the red is revenue. And so you can see that our revenue is essentially flat for 3 years. That was due to the voluntary tax rollback. We saw a slight increase last year due to what was allowed under the Hancock Amendment. And then the audited year that we're discussing right now, the taxes went up due to the levy being restored. And the last slide I just want to share was our current debt. So as you all may recall, back in 2018, the library issued just under $73 million in debt, what's called a certificate of participation. We've been paying back on that every year since, as you can see from those numbers on the left side of the chart. We've repaid $25.5 million of that debt. So our current debt is $47.4 million. If you were to divide that into our assessed valuation, it's less than 0.25%. So our debt profile, I believe, for an organization of this size is very manageable. And you can see there what the debt will be as we continue on. With that, my presentation on the audit and the annual comprehensive financial report are concluded. I'd be happy to answer any other questions that you all may have.
Any questions? All right, our next matter is the amendment to our budget. Any discussion on that from Stan?
Yeah, a vote to recommend to the board, I believe, is what's in order.
It's a voting item.
Okay, we have a resolution to address. Is any, it's presented on the screen, and is there any discussion on that? It's simply a matter of having what we have received just now and passing it on to the full board. Okay, hearing none, I move the recommended action of approving of a recommendation from this committee to the full board to accept the 2024-2025 comprehensive audit financial report and audit as presented. Is there a second?
Second.
Discussion? Teresa, please.
Trustee Thebes,
Yes.
trustee Pandolfi.
Aye.
Just press and hold until 33.
All right.
Okay.
Aye.
Thank you. Trustee Johnson.
Aye.
Trustee Wyckoff.
Aye.
The motion carries.
Go ahead and look at the next slide. What you see before you, the columns on the left are the actual adopted budget that you approved. The columns on the right are what we're talking about amending tonight. And then that last column is what the actual amendment would be at a granular level. However, board policy on this fund is simply controlled at the expenditure level. So the resolution before you is to increase the grant and gift fund by $13,000. This isn't revenue. This is actually when we put the budget together, we had projected a level of spending. Actual spending was less than that. So fund balance is higher than we had anticipated when we wrote the budget. So by restoring the $13,000, dollars that have already been donated or gifted to the library, we'll just have the legal authority to be spent in the current fiscal year. I'd be happy to answer any questions that you all have.
Questions?
Should be the next slide. Or the next one. Should be the motion.
Go to the next one. There you go. Thank you.
Recommendation from this committee to the full board. Resolution identified as resolution 25-007 about 25.6 fiscal year budget to be amended to increase expenditures draft with fund about 16 beyond up to $13,000. For a second.
Second.
Further discussion.
Trustee Wykoff,
Aye.
trustee Thewas, trustee Pandolfi,
Aye.
trustee Johnson.
Aye.
Okay, the motion carries. You're welcome.
So this next item is not a voting item. Just wanted to provide you all with an update. It's on the agenda for the full board to consider. But at the last board meeting, our financial advisor, Stifel, was present, and they indicated that they were going to issue I think it was an RFQ, a request for qualification, to various banks to be the underwriter of the debt should the rates hold and you all determine that you want to reissue or refund, excuse me, the 2018 certificate of participation. So on September 30th, they did issue that. We had 10 respondents. The people at Stifel reviewed those, ranked them, and gave a recommendation that Raymond James be selected as the underwriter. After reviewing the proposals and their analysis, I concur with that. And they'll be here at the full board meeting to present that to you all, but just so that you're aware, that's one of the things the finance committee has been, or the finance department, excuse me, has been working on since the last meeting. Unless there's any questions, I think we can move on to the last item. That's just a copy of the RFQ, I believe. Yep, if you're ready. So just wanted to update everyone. So we did go live with our new finance system in September. It's called BS&A. It's a cloud-based system. All of the users that are currently in the system went through some training on how to enter requisitions and enter invoices. You know, it's a work in progress like anything, but one of the things we're really excited about with the new software is that there's no more taking invoices and walking them around the building to get signatures. Everything's electronic now, everything's date stamped, and there's an audit trail so we can see who approved it, when they approved it, when it went to the next step. And so I'm not going to say nothing can fall through the cracks, but it's much harder for things to fall through the cracks now, as the person who enters it can follow the path all the way along, gently cajole people as they need to get things approved. But most importantly, nothing can be approved or submitted for payment without proper authorization from the department that's requesting. So, excuse me. So we're very excited about that. Another thing that's probably not as exciting, but hopefully people in the organization like it, we've got a better process for tracking purchasing card payments as well. So it's all electronic and in the system, which makes it a little easier, I believe, for people to track those expenditures back to their budget. And the primary reason that we did this, of course, was so that individual departments would know on a real-time basis, how much money they've spent, what they have left, what's been accounted for, what's been spoken for or encumbered. And so we're excited to share those reports and that data analysis with the team. And I think we'll all, continue to get stronger in our financial reporting as a result.
Susan, could you just, to give everybody some context, what was the experience? What is the experience like now compared to before we had this?
Do you want me to leave? So you can...
Yeah.
No. As far as approval goes,
I think she might need a mic.
oh,
Sorry. This was
We're working on getting me permission to enter invoices, but on the approval side, it's fantastic because I can go in and I can just see who's approved it, where's it at, who submitted it. The documentation is submitted as attachments. So every time I get something to approve, I can go in and look at that attachment to see what it is. There's not a lot of paper running around. We're not trying to open emails and did it get sent? Did it not get sent? Who does it need to? I don't have to worry about who it needs to go to since they've got paths for all of them. That part is super slick, and I'm really excited about the our P cards, and having one less step in order to get those items approved.
The reason why I asked Susan is underneath Susan is collections, purchasing, IT and facilities. So it's delivery, right? Yeah. So there's a large amount of money passing through everyone's hands, and having that real-time information to know where you are in your annual spending, I think makes the job a lot easier for the people under your direction. So thank you, Susan.
That's all I have.
Other business? Comments? I just had one, I think we can notice that the presentations of the financial information on the screen is a little more consolidated and information that could be considered extraneous or purely historical. Note, were deleted. It's still available if anyone wants to acquire those, but we're not taking time on right now. And I find it to be very helpful. This is absolutely very appreciation. In fact, we look at your okay. And I think it's like looking for you on the opportunity with consolidated life.
Yes, we are looking into it. They approved the ability to set any fiscal year you want. And so for the same reason that a June fiscal year end provides a whole lot of cash that has to be stored for later use, calendar year end would do the same thing. So we are going to, present options for the finance committee to consider to take to the full board. And then, walk through those steps of what it would take to, change our fiscal year from one 12-month period to another. I'm not really sure that it would change the job. It would, I think, help in budgeting and knowing what the property taxes are. Currently, the way our budget is, everything is presumed, and so if a valuation adjustment hits after we've already passed the budget, we just have to figure that out on the fly. And so if we were to change the calendar or the budget year to match the tax year, the property tax would be established before, and then the budget would be written after. So from that perspective, I think it'd be helpful not only for the departments, but also for the board. Really where I think we'd see the greatest benefit is just in our financial reporting and not always having to have that caveat. If people just pick up the audit and say, they're sitting on $40 million cash, what does a library need $40 million cash for? And they don't understand, that that's money that we collected in December, but we won't collect it again until next December. That can really distort people's opinion about the operations of the library. And so it's in the document, but you have to go reading to find it. So aligning those 2 years, I think, makes a lot of sense from a reporting standpoint as well.
There's one other benefit that our current practice is to put together budgets or develop budgets in one of the busiest times of year, really. So we're putting together budgets and presenting them to the board in June, which is running right into our summer programs and everything that we do around that time of year. So switching it to budgeting at the end of the year, I think, would be a lot more manageable for the staff that we oversee.
I can't hear Ron. I know it's him talking, but I can't hear him.
No, we're ready for, Teresa, would you call the roll, please? Yes.
Aye.
Aye.
Just a sec, I'm so sorry. Start over again. Okay, we're calling the roll now. Trustee Thewis, trustee Wykoff,
Aye.
trustee Pandolfi,
Yes.
trustee Johnson.
Aye.
Okay, motion carries.